the distributions have basically boiled down, if you read Dalton or Steidelmeyer or any of these guys that have written market profile books, they have these all kinds of shapes and what they mean, and I don't think they mean anything anymore. I do know that there's about 4 different distributions that I see. There is a standard-looking bell curve that looks like this. As you can see, S&P did it this day and does it most days. A P-shaped distribution, like an uppercase P, a B-shaped like this, and just kind of a blob. And when a market is profiling very blobby like that, it's balanced, and it's balancing. And this is not a market that we want to be involved with whatsoever. The basic rules of market profile trading focuses a lot on single prints in these reference areas like this. And a single print is a area where, as you can see here, in the 10 to 10:30 time period, the market took off, traded up to here, and then D, E, in the subsequent periods just kind of balanced and made like a little mini bell curve up here, and then we still have this real long tail. And if you're a standard market profile trader, or if you're following the old school methodology, you'd be short looking for these single prints like this to get filled in, because if you want to go back and look at any market, they don't leave these single prints very often. And if they do, they're usually filled in a day or two later, which is a good reference point to have, but that needs to be taken in context. And so this is the last time I showed this slide, I think, was a couple months ago. So that was 150 S&P points later. Now it's probably about 200. These single prints are still sitting here. So if you wanted to go back and look at a market profile chart, there's single prints here, and there's single prints even higher above there that haven't been filled in yet. And so that is a condition of an unbalanced up market, and not a market you want to be fading or selling. The market profile basically uses this blue line here, which is value. And I don't pay much attention to this. I think that's kind of been negated as well. And the value is supposed to determine or show where 70% of the volume occurred. And so on a daily basis, you say, okay, well, that the market decided that value was here on this day. And then the next day, the market decided that value was here. So regardless of where the market closed, the market participants thought that the market had a higher value. That is another typical market profile mistake that I think is invalid for trading, especially intraday. So nonetheless, the initial balance period is a very important aspect of market profile. That's the first hour. And the first hour of trading in any market is when most institutions have to have a certain amount of business they have to conduct, whether it's to hedge corn positions, stock market positions, bond positions. Most institutions do a majority of their business in the first hour. Outside the first hour, if there's much movement past the initial balance, then you know there's other participants participating in something. And so just based on looking at this, what is this, gold? We can see gold open, left what we call a buying tail. So we'd be looking, which shows a rejection of lower prices. So on a day like this, we would be looking at this market and looking for long opportunities. And if you can see here, even just the break of the initial balance period was a really exceptional long. And we were tipped off by this buying tail. And buying tails aren't that important in standard market profile classes. I do think they're important because they show institutions rejecting lower or higher prices. Okay, so let's back it out and look. So this is a bar chart. So this recent auction, which I think is a longer-term auction that's still going on, and I don't think has shown any signs of slowing down whatsoever, regardless of what anybody says and how overbought the market is by traditional technical analysis. This is when the auction started. And I'm going to show you a composite profile a little bit later, which combines all the days since then, just to show you where the volume's hiding that you cannot see on this chart. Now, if you're looking at bar charts or candlestick charts, you would have no idea that the market took off here on 9/1, left these single prints behind. Then the following day came down and couldn't even penetrate through this high volume node or high volume area. This is where all the volume took place. Forget this value area. This is where all the volume took place on this day. And if you can see, we came down to the very top of it, touched it, and we've been pretty much gone ever since. And so we would have been, if we were watching this in real time, we would have been on high alert for a breakout. It left single prints, didn't come fill in the next day, and hasn't been back since. So traditional market profile practitioners would be short, and hopefully they're still not short. Okay, well, back at that time, I had combined, this is in November, the last time I gave this. I'm going to show you an updated version. This is a composite profile. Value had continued to build higher and higher and higher, and the high volume node kept moving higher and higher. And why do I care what the high volume node is? Because if I'm envisioning a bell curve on its side that would look like this would be the midpoint. Okay, so then theoretically, the tail this way would equal the tail this way. Well, if that's the case, where would that take us? And actually, it projected a price of $12.40, which I think we actually traded up to today, and that was completely coincidental. But nonetheless, the last time I gave this, I said it looks like the market's going to $12.40. I didn't believe it at the time, but that's where it is. Excuse me, I meant $13.40. I'm sorry, I had you guys confused. The distance from here to the bottom of this distribution, I can't obviously show you on one slide. If I projected that equal distance above, it took us at 1340, which we are right now, where we are right now, or 12. Where did we close today? I'm confused. I got too many numbers in my head. Okay, you say, okay, well, so what? What do you care about this volume node? Well, this was the FOMC announcement of the QE, or the big announcement everybody was looking for. And look where the dead ass low is, and we haven't been anywhere near there since. Well, so what? Well, how do I use this intraday? Well, this is a profile of the bonds, and the bonds have been in a downtrend, and they were in a downtrend then. And if you can see here, the bonds left, the bonds are a downtrend now. They were in an uptrend in November. The bonds left a single print selling tail, or a single print space like this in the middle of a day, and ended up closing down here. Well, if you were a market profile trader, you'd know, well, the bonds are in a uptrend. You leave single prints like this, especially above. The very next day, the market opened here in Y period, filled these immediately, and which was a great trade for those of us that were trading market profile, and left the high volume node to here. Well, so I said shorts can lean against this area for Friday, meaning if the market opens down here, trades up to here and stalls or encounters some sort of resistance, this is a great area to sell. Here's the next trading day zoomed in. As you can see, the market traded right through the top of its initial balance, barely got through it by 2 ticks, right into our volume node I pointed out on that previous chart, and rotated all the way back down here to the midpoint, which is pretty standard. And on busier days, they'll rotate all the way back around. So this is called a failed auction, meaning we went through the initial balance period by a couple ticks. The initial balance, again, is the first hour when the institutions are active. Couldn't extend it, went right into this volume area, and that's about as good of a setup as you get it. And then we can look at any market today, and there's all kinds of opportunities like this. And the average chart trader does not see those. See, this is what you'd see on a chart, on a candlestick chart. Well, how would you know that existed? You wouldn't. So maybe you saw this doji here, or whatever they call those. The volume wasn't very big, so you said, okay, well, maybe I'll sell it here. Maybe. But the data that is generated by market profile charts is volume on a horizontal scale rather than the vertical scale that you normally looking at. Is volume on the vertical scale rather than the horizontal scale, how you normally see it, and gives you a whole nother perspective. As a general rule, the more you click your mouse, the more money you're going to end up losing, and that's true. If the S&P or the VIX of the S&P gets above 40, okay, well, you might be able to trade a 5-minute chart and make some money, and you can trade more actively. But just as a general rule, there's no more than 1 or 2 opportunities in any given market any day. And sometimes there's not. The S&P didn't really give much of an opportunity today to do anything. Bonds did a little bit. It's been pretty tight altogether, but there's lots of markets that are moving: coffee, cotton, that are tradable. Trading the S&Ps off a 5-minute chart is inverse edge, I call it. You have better odds playing blackjack, which I think is true. If you're going to trade the S&Ps or any market that's not moving that much, you need to be looking at a 60-minute chart, 30-minute chart at the absolute minimum. The market profile course ties it all together so traders can develop a strategy that actually provides an edge. Trading off a bar chart or a candlestick chart is not edge, in my opinion. So we've developed and tested a hybrid model of market profile that can't be found in the usual manuals that traders refer to for market profile. We have a 2-week, highly interactive, practical market profile course with live Q&A. We cover every market that you guys are interested in looking at on a nightly basis, set up trades for the next day. We cover the basis of market profile, the actual auction market process, which I think is the underlying driver that allows you to trade profitably now, is understanding the auction market process rather than the market profile process. Identifying value, how to avoid mistakes and stay out of the fray, and basically how to develop a working strategy that can keep you out of trouble and can get you on the path to being a consistent trader, which is what we all strive to do as individual traders.
Thanks, guys. Thanks for attending. Hopefully I'll see you guys on the 28th. If you guys have any more questions, call Trading Lesson below, and you guys have a good evening. Don't sell the S&P. Bye.